Alright guys, I just want to talk about something here. Now I made this chart the other day about the pattern, about the potential of Bitcoin forming a bullish ascending triangle and then breaking higher. Obviously this is a 6-month chart, but what it would mean is the low could be in for Bitcoin. Now I just want to elaborate on that and put an extra important factors into this theory. Now, I'm not saying Bitcoin's going to pump like XRP or anything, but it's the potential of this pattern forming, right? And that's the main thing, because that's the near term, that's the new 6-month candle potentially flipping green and bouncing, just like we did here. And then you create higher lows the whole way, and then you eventually break out the top of the pattern. So this is the 100 and 200 MA. Now we got a death cross here when the 100 drops down below the 200. We also got the second one right here. If I go back to 2014, right, this is the last time. Let me just check actually. Do we have any more examples here? No real examples here, but something interesting. The death cross happened at the bottom of the market. At the exact bottom of the market, the death cross happened. Okay, so that's important to note. Yes, there was a bit of winding, tweaving, whatever you want to call that, but the market had already bottomed. So if we come back here to 2014, that's probably our first example. It's not 2014. Here we go. What I just want to do is, if you measure this cross right here, and you can see where this dropped to, it dropped basically 70%, 72%. Now we come in and we go to this, we get a second death cross, okay? Now we get a second death cross. How much did that drop? 75%. So you can see that the both drops are pretty much very, very similar. Now I made this video months ago, but this is a follow-up to the video. I don't know when I made it, but I made some video like it, or I was involved in one of my videos months and months ago. But now that we have developed a lot, it's very good to revise this, and you can see that the two of them is very, very equal. And what they are almost is they are measured moves in a way. Now that's not a measured move in structure and depth, but it's a measured move in percentages. Essentially, is what they were doing. Now, if we go back here to the 2018 bear market, now there was no double cross, but you can see that the first drop was 69%. Now, when we came in here and we done this second drop and we done this death cross. So if we just take a measurement right here. This is after the death cross. If we measure the depth, now if you can see that, you can see this is 69% and this is 68%. Again, we almost have identical measurements, identical percentages in drop there. Now it's not a measured move as such in the fact that the depth of it, but because if you took the depth of that, you know, you can see a measured move would take you down here to minus 8,000. But what you have to do, and what happened in both of these previous bear markets, is you take the depth and measured move in percentages. So if we understand that, and you can see it's worked in those both those bear markets, well, we can work forward and try it on the rest of them. Now, this one, as you can see here, this did actually, well, it crossed here. It crossed right there at kind of at these lows, right down in here. So if we do take it to the low, you can see that is a 53% drop. Now this dip here, you can see it did get extended, right? This did get extended to the downside. Maybe the coronavirus crash extended that to the downside. But you can see that both of them again are very close to being measured moves to the downside. Now this wick down here was the difference in the two of them, this extension, maybe the fear, maybe the panic. If you remember that I think it was the Bitfinex or the Binance liquidation engine broke in the coronavirus crash, if you remember that. So that added to that exacerbated the drop at that time. So this is a bit of out of whack, but there probably was reasons for that. Now, if I come back to today's price action and we look at this, so where was the first drop? Well, the first drop was right here. And you can see that it was a 55% drop down in here. And then we got the second, well, we got the cross here actually. So then the second drop again, well, it is now extended past that level. What is this one? That's almost a measured move, but you can see 55% obviously is that is a shallower drop. But again, at this point, now bear with me for a second. Now, this is close to being equal. It is not equal. This again is extended to the downside, more than the original drop. We have talked about, the measured move of this. From here takes you down to 12,000. I did that wrong actually, but it doesn't really matter. I meant to take it from here to the drop, but you can see these moves are this move, and this move are identical anyway. We have already had measured moves here and here. But if you take that extension again, and sometimes you can have a double measured move, obviously that would give you the $12,000 level. But I just want to bring you back to the fact that, now obviously this doesn't have to play out, but we need to see how it plays out. Now, if I take you back to the thought process of, every single bear market in the history, or every single drop in the history, has always been fairly equal. Yes, this one was exacerbated more to the downside. Almost identical prices as here. You can see 55%, 63%. You can see here is 54% almost, and this is 63% almost. These are almost identical to these. And also, all of these ones in the past are both of them were identical. These ones were identical, and these ones are identical, basically 68 and 69%. So the measured move in percentages are showing a lot of correlation to either past moves or to themselves. Now, what if this could be the bottom, just like this was the bottom? And that brings me back to this chart right here. What if somehow the bottom is in on Bitcoin, or very, very close to it, and the fact that we might start forming a bullish ascending triangle? The measured moves all line up to show that the bottom could be in, according to price measured moves and according to percentage measured moves from this cycle and past cycles, and it kind of fits the narrative of this bullish ascending pattern forming. Of course, you can spin your narrative any way you want. The only way this is going to prove itself true is if we flip green here on a new 6 month and actually start forming a green candle like this. So only time will tell. But the narrative and the measured move drops do all fit the fact that this pattern could actually form. I know the overall market doesn't really look bottomed. The stock markets don't look bottomed. So the bit of a recession on the way from the looks of it. So we really have to see what we get, and we'll approach it with caution. But if this does flip green, it might present a very good buying opportunity in Bitcoin, and probably the altcoins. That a lot of the altcoins are now down over 90%. So just something to think about going forward, and especially when we trade into the new 6 month candle.